High-yielding stocks and their lure. When we talk high-yield stocks paying out regular dividends, we're entering a space where stability meets reward. It's like finding a reliable old friend that keeps surprising you with gifts. So, here's the breakdown. Firstly, you've got companies like AT&T and AbbVie. AT&T, the telecommunications giant, has been a go-to for steady dividends for years, although they've had to slash their dividend recently due to their restructuring. On the other hand, AbbVie, a pharmaceutical company, has been consistently increasing its dividend, riding on the back of its robust drug lineup, which includes blockbusters like Humira. Then you've got utilities. Think NextEra Energy. Why? Because everyone needs power, and that demand doesn't disappear in a bad economy. Nestled within the utility stronghold, NextEra stands out with a focus on sustainable energy, which may set it miles ahead as the world leans greener. Real estate investment trusts, REITs, deserve a spotlight, especially ones like Realty Income, which has been dubbed the monthly dividend company. They lease retail space and have a knack for choosing tenants that aren't easily toppled by economic downturns, meaning their cash flow, and thus your dividends, remain as stable as a 14-legged table. Lastly, consumer staples like Procter & Gamble. People will continue to wash their hair and do their laundry regardless of what the Dow Jones does that day. This company has been around since your great-grandfather was in diapers, and they've been paying dividends since before the invention of the light bulb. What makes these a good bet for investing? You're dealing with companies that are often established, with predictable cash flows and a historical commitment to rewarding shareholders. In volatile markets, these can be your port in the storm. Adding these to your portfolio isn't just about those sweet dividend checks. They're also about adding a backbone of stability. When the markets get choppy, these stocks can be like a trusty lifeboat, keeping your portfolio afloat. Remember though, high yield often comes with higher risk compared to growth stocks, so they shouldn't be your entire portfolio. A sprinkle here and there, as part of a well-diversified investment meal, can provide a lovely flavor. Also, as with all investments, it's critical to do your own due diligence or consult with a financial advisor. Market conditions can change, and what's true in Portland, Oregon holds true anywhere. Today's cash cow can be tomorrow's cash cobra. And one more thing. Dividends are taxable income. So understand your tax situation, or these high-yield dividends might just have you paying Uncle Sam a visit more often than you'd like. Mix these ingredients together, and you've got a long-term recipe that might just withstand the test of time and volatility. Just remember, the stock market isn't a get-rich-quick scheme, but rather a get-rich-slow game, where patience is more than just a virtue, it's a strategy.